Hey everybody, JD here with your Rational Trader Market Analysis Daily. In today's video, I've got two more mean reversion. Boy, the power of the mean really is something else. So just want to keep going back to the well, exploiting the premiums on options during earnings season and the really the power of two sigma and the reversion to the mean very, very much alive and well. Yesterday we did a call credit, the really the trade of the quarter, doing call credit spreads on Salesforce, really way, way, way above two sigma on the call that we were able to write, expiring on Friday. Stocks down, nowhere near threatening our profit, full profit on CRM. So let's turn the page. I guess real quick, before I do turn the page, just want to note that for some of you, writing call spreads in this manner may be a little bit discombobulating or disconcerting, given the amount of capital that you are risking if the trade does not go your way. Totally understandable. What we're doing is trying to put the odds in our favor where we're going to be right a significant portion of time, 90% or more on these trades, so that and even the full risk of loss is so far out of the realm of statistical probabilities that that's why we're making these trades. If you watched my Two Sigma video, we're exploiting that discovery made 200 years ago by the mathematician Gauss, German mathematician Gauss. And really, there's different ways to uh, utilize the uh, phenomenon of two sigma reversion to the mean, et cetera. So just wanted to tell you, I understand the fact that, on CRM, for example, you're making $500. Potentially, if the trade goes against you, you could lose 5,000. So it's a 10x risk reward. But really, the way I look at it is similar to maybe let's use a football betting example when the New England Patriots with Tom Brady were steamrolling everybody, and they played the worst team in the league, right? You had to risk $10,000 to make $100. That just is what the nature of what is a high probability event it gets quantified. And so same goes with these credit spreads. So without much further ado, let's get to today's trades real quick. The first actually is not a credit, call credit. This one's actually a reverse iron condor on Lululemon, looking for a big move after it reports earnings today after the market closes. We are looking at the buying a 20250 put and buying a 20250 call on the Friday expiration, September 5th expiration. We are then on the call side, we are going to sell a 21250 call, and we're going to sell a 19250 call. All four legs of that trade are going to run you about $9.20, I believe. So you've got 80%, not 80%, 80 cents of profit potential on a move of 4.5% to the upside and 5.3% to the downside. And again, I expect Lululemon earnings, one way or the other, to move actually double digits tomorrow based on what I'm seeing in the clothing space, and that's what Lulu is indeed in. Now, I do have another call credit, the go-to trade of the quarter, this time on DocuSign. Let's look at the chart on DocuSign. You can see shares are, not quite at two standard deviations above the mean, but pretty close. And so we're looking at doing a call credit here where we can uh, basically sell a call well outside of two standard deviations. In fact, way up here at 85. Again, using the Friday expiration, September 5th expiration options, you are going to sell the 85 strike for about $1. Putting some insurance, obviously, on this trade. You don't want to be naked at $90, so there's a $5 spread there. You can sell that one for 41 cents, collect 41 cents. Your total cost, I'm sorry, got that reversed. You're going to buy the 90 strike call option for 41 cents. So your credit of $1 on the 85 strike less your cost on the 90 strike is going to be right at about 60 cents net. And again, you're on 10 contracts, you're going to be risking $5,000 to make about $600 or $590 to be exact. So feel very good about DocuSign. If it does go up, I don't think it's going to go up that much. Add in the fact that tomorrow's the jobs report, so you're going to get lots of volatility here. So that really gives us some, I think, protection on Lululemon, on the reverse condor there, and then on DocuSign. Uh, I know the news is going to be bad news. Are we going to get more bad news as good news? That's driving the market the last 2 days here, perhaps. And but I don't think it's going to be nearly enough to drive DocuSign up above $85. So that's what I have for you today. This is JD for the Rational Trader. Take care, everybody. Have a great day, and we'll see you all on Monday. Tomorrow is podcast day, so I won't have another video for you, but we'll be back at it on Monday, hopefully with more mean reversion cash machine trades. Take care, everybody.